Hello, everyone. My name is Matthew Frailey, founder of BreakpointTrades.com. You know the drill. We've been doing this since 2003, providing excellent technical analysis, market commentary, trade ideas, and of course, mechanical trading algorithms like you see here to individual traders and institutions. And more recently, what we're really excited about is our KISS systems. Nothing out there like it. If you guys want to look at it, go to Systems, KISS STS Tables, click on that. And you can do it currently, even if you're not a subscriber. And you're brought to this page where we have the systems run on 630 instruments currently. And they're in various sections. There's a basket, there's all the NASDAQ 100 stocks, all the S&P 500 stocks, top 100 ETFs. You can see some of these gains are pretty impressive. 6%, 28%, 36.5%. And even the Dow Jones, we have all 30 stocks here. And currently, very nice gains on these. And if you're a subscriber, you can go to the favorites, click on this to receive automatic email notifications. They'll come right to your email inbox. Soon we'll be adding SMS notification as well. So, you can follow the systems, follow the smart trailing stops, very easy. And the stuff I'm going to be launching soon is, has probably 3-4 times the performance of just these standard ones. So very excited about that. Anyway, let's get started. I hope everyone had a nice weekend. It's Sunday, December 3rd, and this is the very comprehensive technical analysis market newsletter for Sunday, December 3rd, through the 8th, 2023. This is our back-end recorder for our website, which I'm going to get started right now. Hello, everyone. This is Matthew Frailey with BreakpointTrades.com. First off, hope everyone had a nice weekend so far. It's Sunday afternoon, about 4:30 Eastern Standard Time. And again, this is the weekend newsletter. Got quite a few charts to discuss tonight, guys. Also, I'm going to discuss some of the KISS systems, which we're getting closer to launching. Very excited about that product, and I know a lot of you are. And but as far as the market, again, as you know, so first off, we're in the first week of December, right? And market seasonality has played out this year very well. We had a correction from August to October, which we called very well. Remember, we were warning about that in July. And then market bottomed in late October. And let's just use a football analogy. The Bulls intercepted the football, and man, have they run down the field, resulting in massive gains for the indexes and most stocks. Also, seasonality wise, since we're just talking about that, usually you see some weakness during the first 1 to 2 weeks in December. Doesn't mean it has to. We could just keep going. But if we do, I'm looking at that as yet another buying opportunity. Again, the KISS systems are long on the indexes and a lot of stocks. So if you're following those, just stick to them. For the week, nice gains for the indexes, especially the Russell and Dow. Remember, they've been lagging the most this year, so they're really playing strong catch up. Okay. Again, there's 4 major factors for this rally. So number 1, seasonality from October. 2, we were extremely oversold with extreme bearishness in late October, if you recall. 3, we've had inflation coming down, at least by the numbers they show. And the market's convinced that rate hikes are done for the year, and maybe we'll get some cuts next year. Number 4, interest rates peaked in late October. I called for that, and that pullback in the 10-year has helped the market substantially. News-wise this week, ISM on Monday, Wednesday ADP, Thursday initial jobless claims, Friday the non-farm jobs report. Also, the precious metals have screamed higher since that early October bottom. Nice gains in gold. Gold made a new all-time high. I mean, that area just looks fantastic. I may do a separate video on that as well, just because that area to me looks really good. Okay, let's go ahead and get started with these systems. So, the first thing we'll discuss here is, again, if you're a subscriber. If you're not a subscriber, you can't set this up, guys. Okay, so, get rid of your alligator arms and subscribe. Our memberships are very reasonable, but if you go to the If you haven't set up the KISS systems, you need to do so if you're a subscriber. So we go to systems, go to the KISS STS tables, and remember, you got these various tabs. Remember, on any of these tabs, you can set favorites by clicking the star. Go to favorites, click on receive alerts about your favorites. So it's in the favorites tab, and there's a checkbox there. We don't have it automatically checked for subscribers because of spam laws, so you got to check it yourself. But again, you can just see, I mean, in every day or whenever there's an update, whenever one of your favorites enters a new long position, or there's a new smart trailing stop generated, or it exits, it'll email you a very clean table once a day. Okay. And so, yeah, I mean, look at some of these gains on my favorites over the last month: 46.85%, 36.5%, 23.7%, 15.8% on UPro, etc. Again, if you haven't set this up, you're missing out. Okay. And if you're not a subscriber, you're just watching this on YouTube, you should really subscribe. There's nothing out there like this. I've never been more excited about a product. I'm not trying to use hyperbole. So, image number 3. So this shows you an example of what your email alert would look like. So here's the last alert I got on Friday to my favorites. You can see all these had new smart trailing stops, Apple, and there's been 5 smart trailing stops so far since the entry on November 6th. It is up 6.7%. QQQs, there's been 6 smart trailing stops. UPro, there's been 8. So the stop has been raised 8 times, and the trade is up 15.8%. So that's an example of what your email would look like. Okay. Next, going back to some examples of some of these high performance KISS systems. So I'll be launching high performance versions of these. It will be a premium charge, but if these return even half of what some of the historical gains look like, everyone's going to be super happy. So here's GDX 78 minute, and you could see it took a long on 11:14. The previous trade got stopped out. That's fine. Remember, the nice thing about the KISS systems, they have a stop, and then they raise their stop over time. So you're always protected. You have peace of mind. So you can see it entered here on 11:14, and there's been 2, 3, 4, 5, 6 smart trailing stops. Current stop is 30.50. So if the trend continues, it'll hold it. If it decides to have a nice correction, it'll exit. Here's IAU, that's the gold ETF. Enter here on November 16th. That's the current stop. Here's SPY. It's a 78 minute. The current stop is here. You can see it entered on 11/2. And here's UPro. So that's some examples of these. And image number 5. So here's some statistics that I did on the weekend on a couple interesting ones. GDX, you can see GDX versus on the KISS system versus buy and hold. It's just not even a comparison. The beauty in the KISS systems is the low drawdown. So GDX is a very volatile ETF. You can see the drawdown on buy and hold. Average drawdowns are around 40% a year. Again, that's the average. And there's been years that have been extremely high. There's a 72% in 2008. The average drawdown in the KISS system is about 5%. Again, there's one 15.7%. It's a little higher than I'd like, but again, it's a volatile ETF. But look at these gains per year versus buy and hold. It's just not even a comparison. Here's Nugget. Now I showed Nugget. That's a leveraged ETF. This shows you a couple things. So number one, it shows you why these leveraged ETFs are not meant to buy and hold. They degrade badly. And take a look at these. Look at these losses. And look at the average drawdown, 73% a year. Crazy. So here's the KISS system. Knocked it out of the park with these gains. Especially 2016. Holy cow, up 516% on 8 trades. Crazy. So again, this stuff will be coming, guys. Looking forward to it. I don't know what the prices will be yet that I'll be charging. This will be reasonable, especially for what you get here. And let's go and move on. Let's move back to the newsletter market analysis. So here's the index sector table, what transpired today, on last week. So Market had a nice rally on Friday, especially the Russell. Man, the Russell was almost up 3%. For the week, strong gains, obviously gains in the Russell and the Dow have been leading. We follow 21 market sectors here. The majority were up for the week. What was down were communications services, semiconductors, and oil services. Big gains in the banks and financials. They really stood out. Currency wise, US dollar down slightly for the week. That didn't hurt. No, it didn't fall much. Gold has been doing extremely well. We'll get to that in a minute. Cryptocurrencies have been up nicely. Commodities, the general commodities have been down. DBC, that's the index, down about almost 1%. A lot of that's attributed to crude oil, which was down 2% for the week. Natural gas down 6.7%. Where we saw gains, we've been seeing gains, is in copper. It broke out again, up 3.75%. Nice gains in some of these ags. Coffee up 9.8%. Don't tell Starbucks. They'll raise the price of your latte. Precious metals had a fantastic week. Gold up 3.5%. Closed at a new all-time high. Silver, beautiful breakout. GDX, the miners, they've been leading up 8.5%. And again, what has helped this market rally is the sell-off we've seen in the 10 and 30-year Treasury yields. Next, item number 7 shows the economic news calendar for the week. Like I said, factory orders on Monday and ISM, ADP on Wednesday, initial jobless claims Thursday, and the big non-farm job pay report on Friday, and of course Michigan sentiment. All right, guys, let's go and jump to the charts and look at the indexes. So, first chart below, item number 8. This is the breadth thrust indicator. Okay, you've heard about that before. Remember, we had a confirmed breadth thrust buy signal in early November. That's where this indicator goes from oversold conditions below 40% to over 61.5% within 9 days. And it did it within, I think, 4 or 5 days here. So that confirmed weeks ago, and it's obviously been playing out. Next, image number 9. This is TLT. That's the 20-year bonds. So I want to toot my horn a little bit. I drew this 5-wave pattern back in, I think, September, and I said I'm watching for a major low at this demand zone, and I said I could count 5 clear waves to the downside with RSI and MACD divergence, and I said, long term TLT's in a secular bear market now, but things don't go straight down. We have 5 clear waves. I'm expecting perhaps a pretty decent ABC rally up, and this has been occurring, and this rally in TLT, or the pullback in the 10-year Treasury yield, has helped the market as well. Next, moving to the indexes, chart number 10. Here's the monthly view of the 5 key major indexes. Again, November was a hell of a month for all these indexes. We're now in the December. Next, chart number 11. Here's a daily view of the major indexes. And again, remember, in late October, we were below the lower Bollinger Bands, extremely oversold, bearish sentiment, everything lined up, rates bottomed, or topped, and we've just had a straight up shot since. The major indexes have ridden their 9 EMAs all the way up. That's a fast moving average. Shows you how strong this trend has been. Last week, the Dow led, and especially the Russell. Next. Chart number 12, here's the Dow. We usually don't show the Dow, it's 30 stocks, but you can see broke out to a new all-time high on Thursday, followed through on Friday. Next, let's take a look at the KISS system, how it's done on the Dow. So again, with the KISS systems, we follow all the 30 stocks, and you can see on Friday, we've had 1, 3, 4, 5, 6, 7, 8, 9 updates. And you can see almost all the Dow stocks are long except Cisco, CVX, Merck, WBA, and Walmart. And you can see the gains that these are up. Very nice percentage gains on the Dow components if you follow the KISS systems. Congrats to anyone who's done that. Again, set up your favorites if you haven't done so, as I already covered. Next. Moving on to the S&P 500, which is our general proxy. Here's the monthly view of the S&P. Again, nothing's changed in the bigger picture. We're still in this kind of long uptrend channel, essentially 14-year channel since the 2009 bottom. Next. Chart number 15, here's the weekly view of the S&P. Again, up about 0.8%. It's now retesting this kind of supply zone. Again, it would be ideal to have a slight pullback here and then an eventual breakout. Again, a lot of times you see weakness in early December per seasonality. We'll see if we get that or not. Chart number 16, here's the weekly KISS system. Usually I don't show the weeklies. I'm really kind of involved in the daily and the high performance stuff, but you can see how this is done. It's done extremely well. You can see it exited, got very nice in early 2022, kept you out of that bear market, and it's been long, this year since, looks like it went long back in May. Again, it's not going to be as reflexive or dynamic as the dailies, which should make sense. And the stops are pretty wide on it. Next. Moving on to the shorter time frames, here's the daily view. So again, we had that 5-wave move down. Hell of a rally since, and we're near those all-time highs now. We have a slight RSI divergence here. I would love to see a pullback first. What we could also see is a breakout first. You draw this like just very early this week. Then we get our pullback and then up. We'll see. But hell of a move since that October low, clearly. Next. Chart number 18, here's the equal weighted S&P. What's nice is we're seeing now some of the general stocks starting to participate in the market rally. Remember, most of the year it's been at 7 to 10 stocks, Apple and Microsoft and all that. So now they're starting to play catch up here. Next. Chart number 19, here's the KISS system, the daily for the S&P. That's on the STS tables. You can see it had a nice entry, and current stop is 44.48. Image number 20, here's the 4 time frames we like to follow with some of our custom indicators. So the daily is the upper left. Remember, we had the DeMark 9 at the lows, super wide MA ribbon. Again, hell of a rally since. ATR is support on all these time frames. We continue to bounce off of it. And you can see on the 78 minute, I'm watching this. We've had these cycles. Price has been responding to this lately. We have a little resistance cycle here. We'll see if we get a little pullback from that or not. Next. Chart number 21, here's the half-day chart. Again, shows you essentially the same thing as the daily. We're almost right up at those all-time highs. Chart number 22, another 60-minute chart. Chart number 23, here's another 60-minute chart. Shows you all those open gaps. It shows you the strength the market has had since that breath thrust signal move from late October. And so we had a pullback late last week, about 50 points. Again, it was very similar to the previous pullback, 49.5 points. Again, guys, 49.5 versus 50.4. It's essentially the same thing when you're talking about 4,800, right? Someone asked me, well, is that a symmetry break? No. I mean, to me, that's the same number. All right. So that's your number, basically 50, 51 points. We need to see a pullback larger than that to break symmetry. Right now, we got a little channel here. You can see the moving average ribbon. We're pinching late last week, and then we got another pop out of that. Chart number 24, here's a 15-minute view of the S&P. You can see this channel. And this also is a little educational thing. I thought this was well done by Steve. So on Thursday, so that's Tuesday, Wednesday, Thursday. So that's Tuesday. We had that 3-wave move up to the 45.87 high. We've been looking for a pullback, but you don't end uptrends on 3 waves. So that's how we knew to look that we still would likely have another rally. We pulled back and we've had another rally to another high. Okay, so that's just a real simple, example of Elliott wave. Next, chart number 25. Here's the triple Qs weekly. So they lagged last week, only up 0.11%. So what's been leading the market now lately, which is good, we're seeing broader participation as the the Russell, the Dow, as a lot of the non-mega cap tech stocks have been starting to participate in the rally. Chart 26, here's the daily triple Qs. Again, they made a new all-time high, as you know. This is the current supply or the demand zone. We have an open gap down there that could be a target on a pullback. Chart 27, half-day chart, getting similar. We do have a RSI and MACD divergence at that 394 high. Chart 28, here's a 60-minute view. Not a lot to say about it. You could see, I didn't add it here. I forgot to update this chart, but you could draw a line here. That could be a little support if broken. Maybe we'll fill that gap. So that's something to monitor coming into the week. Next, chart 29, here's the KISS system for the triple Qs. Again, excellent long early this year from March, exited there in August. Took a long, then stopped out, and it got a long couple days off the bottom, which was an excellent entry. And it's up nicely. You could see the system, KISS system raised its stop 1, 2, 3, 4, 6 times. It's up nicely. And it's guaranteed a profit. This is 373.40 is well above this entry. Chart 30, here's the 4 time frames. Again, extremely similar look to the S&P. You could see here on the ATR support on all these time frames. 130 minute, we had a little support cycle trying to bounce from. On the 78 minute, we lost the ATR, which is now resistance. We did bounce a little from the support cycle. Next. Chart 31, here's the Russell. Again, this has really been coming on strong. Really nice move, up 3.1% last week. Nice rally off that big support low. Chart 32, here's the monthly. Again, you could just a great example of technical analysis. This was previous resistance set up in the 2018, 2020 highs, which was retested in 2022 and 23 multiple times, and we rallied perfectly off of it. Chart 33, here's the daily. Remember this inverse head and shoulder pattern I showed a few weeks ago? It's playing out beautifully. Look at Friday's rally, up almost 3% in one day. So those weekly gains on the Russell all came within Friday, essentially. Look at that volume, too. All right, guys, that does it for the indexes. Let's move on, look at some of these custom indicators. So chart 34, here's the VIX. As you know, the VIX is melted down with the market rally. There is a support trend line here to monitor. And we do have some RSI diversions trying to set up, so be aware of that. Again, that could all line up for that typical weakness in early December, perhaps. Chart 35, here's the VIX and the VVIX. Remember, the VVIX, the Bollinger Bands are pinching. It's the volatility of the VIX, and so it may be showing, an early warning that the VIX may be soon to bounce. Some other things to keep an eye on. Here's the S&P 500 versus the inverse VIX. The two are correlated. You can see how well they are correlated. So it's obvious something to watch. Keep an eye on. Chart 37. Here's the ETF. It's SVIXY, the inverse VIX ETF versus the S&P. And again, look how correlated they are. So definitely something to watch if you start seeing a move in the SVXY and the S&P hasn't responded. Next, chart 38, here's some of these trading systems that are available that we have on our stock charts and that we freely share with you guys. Remember, on our newsletters, guys, you can click View Live Chart and get the live chart URL and then, bookmark it in your browser or save it into stock charts if you have an account. You don't need an account, but you can save it into there and have all our annotations. But look at these awesome buy and sell signals on this simple 9 EMA crossover system on the NYSI for the S&P. Really nice. Again, this didn't catch as great of an entry, didn't catch the bottom. It's never going to, but still a nice entry there. Chart 39, here's the NASDAQ volume McClellan summation with the 2 and 5 EMA crossover system. Same thing. Very nice trades this year and really nice entry there in early November. Driver 40, here's some short-term things to monitor. The NYAD advanced decline with the Bollinger Bands. It is now outside its upper Bollinger Band, so again, that's showing a short-term or a little overbought. Driver 41, here's the percentage of stocks in the S&P 500 that are above their 20-day moving averages. So again, this is an overbought territory. Again, it can go higher, but it is up here. Back in October, it was very oversold. Chart 42, this is the stocks above their 20 EMA instead of SMA. The EMA, you have some divergence here. But again, just something to be aware of. Okay, moving on. Moving on to the bond market. Chart 43, high yield corporate. High yield corporate bonds, they continue to rally. Remember, market follows high yield corporate, and it has been following. That's been one thing that's helping drive the market. Chart 44, here's a 2-hour review. Clearly an impulsive move. We could have some, here I have 5 little waves up. Chart 45, here's the 10-year treasury yield. Again, topped out in October from the RSI and MACD divergence that we warned about. We warned this parabolic uptrend was unsustainable. It is now corrected in between the 38 to 50% fibs. 200-day moving average is below, but this steep sell-off in rates have helped the market rally. Chart 46, there's the TLT on the daily. Remember, I showed the monthly how it was in major long-term support down there in October. Okay, let's move on to some market sectors. We're not going to look at all the sectors. We'll look at a handful of them here. Here's XLK Technology. Again, very similar to the Qs. Again, I hate to even show it. Like I said, these two stocks, Microsoft and Apple, make up 48% of this thing. So it's almost better just to look at those two stocks than this. That's why I hate these huge weightings on some of these things. Chart 48, here's the semiconductors. Beautiful rally from that low in October. It appears to be consolidating. Looks like a bull flag setting up. Chart 49, transports. Hell of a rally since that October low. We had a tight coil there, busted out of that. And look at Friday's rally. Huge move on this sector. Chart 50, Jets, that's the airlines ETF, subcomponent of transports. Big move on Friday. Again, we had a long entry down here in early November. Hell of an entry, hell of percentage gains. If you're still long this, guys, just trail your stops up. You could put a stop here at that 1644 high or the low, on 1644 or the low on Thursday. Just trail the stops up, ride the trend as long as you can. Chart 50, here's the banks. So last week, the banks and financials really started to take off. Banks essentially had a double bottom in October, but really breaking out nicely this week over the 200-day moving average. I looked at a bunch of bank stocks, and they all look the same. So if you want to play this sector, probably the easiest is just the ETF, which is chart 52 KBE. Again, big breakout from that pattern. Looks great. Chart 52 XLF financials, again, just continues to roar higher. Chart 54 home builders. While people were talking about a slowdown in the housing market, that pullback in rates have helped this housing sector. Look at this big move up, breaking out to a new high. And chart 55, here's IYR real estate moving up strongly. Chart 56, retail, big rally on Friday. Again, a lot of these, non-tech stocks are really playing catch up in the market here. By the way, on an educational standpoint, we talk about symmetry. Here you had a bullish break in symmetry in October. Then we set up a double bottom, higher low. So, chart 57, FedEx. That's one of the stocks in the transports. Obviously moved up nicely that we've been showing. Chart 58, XBI Biotech. Remember, we had a bullish symmetry break back here in early November. I said to look for a higher low, which we got, and I said you got to trigger right off those dojis. Hell of a rally since. Chart 59, LABU. This has been on the list as well. Again, I put it out back in October or November here, but I said also it kind of had an inverse head and shoulder pattern, and it broke out last week. Chart 60, XLE Energy still lags, which is fine with me. That sell-off in crude oil not helping this sector. Chart 61, emerging markets. You can see the bullish symmetry break back here in early November. Right now, we're setting up into a bull pennant. Okay, let's move to the commodities. Jarber 62, DBC. This is the weekly commodity index. Like I said, the commodity index was down almost 1% for the week. Still holding this 200-day moving average for now. That's your big support. A lot of the sell-off in this was attributed to crude oil, which had a big sell-off last week, down 2.5% alone on Friday. And we had a little double top there recently. There's down here is your next demand zone, which it's possible we could see crude oil move down into there. Jarber 64, here's natural gas. Again, been leaking oil. Slight break of this channel. Jarber 65, copper. Big, nice breakout last week. Look at Friday's move. Again, just a great example of how it held this support. And some of the CPER, copper ETF, again, you could look at individual copper stocks like FCX. There's a bunch of them, but that's some ways to play copper. Looks great here. Moving on, let's look at Bitcoin, which has been screaming higher. Again, only thing I could say here on Bitcoin is we have a pretty good MACD divergence setting up here. You can see this new high. You can see the MACD's lagging. Again, divergence itself is not a sell signal, but it is there, so to be aware of. Jarber 67, here's the weekly view of Bitcoin. Again, back last year, we put this 5-wave downtrend. And look, that ended up being the bottom. Nice rally up. It's now approaching the 50% fib. Maybe Bitcoin's going to at least make it to the 61.8 fib up here. It is quite overbought in the short term, obviously. If we do get a bit pullback in Bitcoin, BITI could be a way to play it. It's the inverse ETF. You can see this kind of wedge pattern. Again, this wedge could be negated, but it is right here at support now. Fantastic moves on the individual stocks last week. Here's Mara. Huge move on Friday, up 14.5%. This coil pattern has played out exceptional. Jarber 70, Coinbase. Of course, this one's had a hell of a move. We do have a little RSI divergence up here now in the 5 RSI. And you can see, guys, how this trend has been strong. You had a little short setup right here, mean reversion, but that's all it was. You got a quick pullback to the 9, and then you bounce. So if you didn't take profits, you're crying. But trend is up, but we do have a divergence now up here. Jarber 71, Riot. This has also been on a watch list. Nice breakout and move since. Next. Jarber 72, US dollar. So the dollar has sold off nicely since October. That has helped the market, and it has helped gold. Now, we did have a bounce on the, looks like this dollar chart didn't update for some reason. Oh, no, dollar didn't. Never mind. Brain fart there. The dollar's in trade on the weekend. But again, the dollar so far has bounced near that 61.8 fib. It's always a major area to watch. But so far, gold's been holding up well. Let's take a look at the Japanese yen. Here's the weekly view of the yen. Again, it had basically a perfect double bottom here in November. And you can see really a low risk entry, in my opinion. How could you play that? One way to play it would be FXY. That's the yen ETF. Essentially bouncing off this double bottom. You could be long here, put a stop right at that 61.09 low. And the bigger picture chart on the yen. So this chart goes all the way back to 1998 essentially. So we've slightly undercut that 98 lows, but we do have a big MACD divergence setting up now and an RSI divergence. So if this is put in a better low, that could mean trouble for the US dollar. Let's move to the precious metals. This area has been really awesome. So here's the daily view of gold. Again, back in October, I labeled this as an ABC, and that was the correct call. Gold has rallied strongly since. Basically 300 points. Closed at a new all-time high on Friday. The stocks have been leading lately. Remember, from May into October, the stocks were lagging, but they finally started playing catch-up. Jarber 77, here's the weekly view, up 4.3% for the week, closing at a new all-time high. Again, remember I've been talking about the ratio here, the GDX versus GLD. This was triggering last week, and it has followed through nicely. Remember, gold tested this resistance 3 times, essentially. I said the 4th time we're likely to bust out of it, and that's what I think is going to happen. Charber 78, here's the monthly view on gold. If you want the super bullish view, here you go. We're kind of moving up in this wave 3. If this is the correct pattern, I think we could see gold up at 3,000 bucks. Charber 79, silver. Silver had a big move last week, up 6.25%, firmly breaking out of this coil. Charber 80, here's the daily move. You also had a nice buy signal on that morning star back in early November. Charber 81, here's the monthly. Again, I need to remove this. Ignore the cup and handle. What you got here is essentially a big coil that has been forming over the last almost 4 years. So energy's been building. You can see the moving average all pinched together and then even on the ribbon. This could result in a phenomenal move. Moving on to the stocks, Charber 81, here's GDX. Again, remember we've been showing this as an inverse head and shoulder pattern. This is playing out beautifully now. Charber 83, GDX on the 2-hour view. Again, remember it filled that open gap, and that was really the time to go long. Nice move up. On the shorter time frame, you can follow the ratio. The GDX GLD ratio is your friend. Currently still uptrending. Charber 84, GDXJ. Again, I need to update this, but as I've been stating, this move up is either wave 3 or C, and that is obviously playing out. I'm favoring wave 3. Next. Charber 85, here's the BPGDM system. So this was an overbought territory in October. That was a heck of a long entry there, right? Just like that was a heck of a sell entry back in May when it was an overbought territory. Nice clean Rico chart. You know, nice, gives you nice clean buy and sell signals. Following up on some individual names that we've put out in this sector, if you have, if you traded more than just GDX, the ETFs, here's FSM. Had an inverse head and shoulder pattern. It's been a straight up move since. A huge percentage gainer. Charber 87, here's WPM. That's another silver stock. Nice move since then. So that trend line break. Charber 88, one of the big ones, AEM. Again, similar look to the GDX, kind of this inverse head and shoulder pattern. Playing out beautifully. There's no MACD divergence on these guys. They are getting a little overbought. But what that means is the next pullback should get bought. Charber 89, GOLD, again, another major. Same pattern, essentially, kind of a big inverse head and shoulder pattern. And I first had it as a long back during early October off that doji, long-legged doji. 1425 was your trigger. Charber 90, MTA was another one I mentioned as a very low-risk buy off this big support that went back to 2017 around that 2.5 area. Charber 91, DRD, one that I've been showing in a coil. Still hasn't really had a thrust out of here, but one to watch. But again, great move in the precious metal sectors, guys. Now let's follow up on some of our other recent trade ideas. I didn't add any new ones here, guys, since I got so many charts that I'm covering already. But here's CKPT. It's been on the watch list for a couple weeks now. Inverse head and shoulder pattern. It has played out beautifully. Hope some of you caught it. Trail your stops up, take some profits. Charber 93 VSCO. This was a long idea on the watch list a few weeks back. Resistance around the 20 area. Hell of a move since. Charber 94 Run. Another one that's been on the list. Nice move last week through that resistance. Charber 95 NRDS was a coil I put out last Monday. And beautiful move. If you bought this, congrats, put a stop in place. You could probably have a stop either at Friday's lows or maybe even around this 12 area, around 50% of this large candle. Charber 96, TCN, another one has worked out beautifully. Nice pop on Friday. Charber 97, BYON, another one from early in the week. Nice pop this week. Again, guys, I'm just showing you this because our trade ideas have done extremely well. Here's Massey. It's been on the list for at least nearly a month now. I had it in this rectangle pattern. My target's still up around 100, which hasn't been achieved yet. If you're still long, I think you could move a swing stop at Thursday's lows now. That's the last higher low. Charber 99, BLDR. Another one that's been on a list here since basically early November. You had a flag move up, and my target's been up here at 145. Just trail the stops up. Could probably have it around Thursday's lows now. Chart 100, Airbnb. This is the one I put out last week on Wednesday. Huge pop on Friday. Look at that, up 6.8%. The 1-to-1 symmetry target would measure up around 142. Chart 101, here's the final chart, 60-minute view. This was the one I was showing last week as well. If it broke the support, you had a potential target of this open gap, but we held the support. I said you could go long with a tight stop just below the lower trend line, and if you did that, hell of a move. And again, guys, sometimes I get comments from maybe newbies. They might say, well, Matt, or you guys are just saying, hey, it could do this or it could do that. How is that useful? Again, guys, trading is not about having a crystal ball. Okay, it's not. Yes, we have, our what we favor, and a lot of times what we favor plays out. But trading is not about having a crystal ball and knowing what is going to happen. A lot of trading is identifying areas where you can execute a trade with low risk and high reward. When it was testing the support, you didn't know if it was going to break down or rally. Okay, you could have went long, saying, "Hey, I'm going to go long here. If it holds the support, I'm going to put a really tight stop just below the trend line. You don't lose much if it goes down, if it breaks that support." And then it rallied up. So that's an example of trading where you don't know exactly what's going to happen, but you identify an area where you can have a tight entry and a tight stop. That's what's trading about, guys. It's not about having your crystal ball. All right, let's see what happens this week. I appreciate everyone's support. If you're on YouTube and you haven't subscribed, you really should. Okay, lot benefits being a subscriber versus just looking at YouTube. All right, guys, take care. Have a great weekend.